Hello and welcome to the Success Showcase. I'm your host, Eric Lopkin from the Modern Observer Group. And with me, as always, is Chip Janiszewski from the Hapoiness and Success GPS. Chip, how are you doing this week?
Doing great. How about you?
I'm doing fantastic.
So we got some more weather coming tomorrow. It seems like every other week where they're talking about snow or 60-degree weather, and last week was 60, and tomorrow they're saying 12 to 18 or maybe even 2 feet of snow. So
yeah, we're actually getting hit with two different storms that merge somewhere around Washington, D.C., and then come up the shoreline.
Yes, a weather of marriage right over Connecticut.
Yeah.
Or marriage of weather, whatever you want to call it.
Yes.
But it's mid-March, so it won't last too long.
Absolutely. We're a week away from spring, and I, for one, am looking forward to it.
Ditto that.
Yeah. Today we're going to talk about the book, The E-Myth Revisited by Michael Gerber. And for those of you not familiar with the E-Myth, the E stands for entrepreneurial. And the myth that he's referring to is the myth that most businesses are started by entrepreneurs. Now, he talks about the fact that most people are actually technicians. They do their job, but they don't have the overwhelming vision that an entrepreneur needs. And in his basic concept, he divides people into three sets. There's the entrepreneur, and that's the person with the vision. There's the manager. The manager provides order and systems. And then there's technicians, and the technicians are people that actually do the work. But he talks about the fact that people are not necessarily entrepreneurs when they start their businesses, and that's one of the things that causes them to fail. Now, I actually disagree with part of his premise, because he talks about the entrepreneur, the manager, and the technician as three separate people, or three separate aspects of a person. And I don't think that's the case. When we created the Biznetics system at the Modern Observer Group, we came up with our own version of this. And the entrepreneur is not just a visionary. The entrepreneur is the whole person. It has to be able to run the show for a business to be successful. And so we divided the entrepreneur into 5 aspects that we call the team within. And that team is the artist. The artist is the one that's responsible for the grand vision. The architect builds the system and creates the details. The supervisor is the part that gets the artist and the architect to work together to create the complete vision and all the systems that a business needs to go. The builder, who's the one that actually does the work and follows the system to make sure everything gets done. And then finally, we added another aspect called the kid. And the kid is the aspect that really sets what we do apart from the E-Myth, because the kid is the part of you that finds fun. And I think that's the fatal flaw in the E-Myth Revisited, is that his whole assumption is you're building a business to make the money so you can leave the business and retire. And his focus is, putting together the systems, which is great. You need those systems. But his whole point of view was you don't want to be working. You want to create a business, make it work, and then sell it so that you can go do what you really want to do. Well, I look at it as, why would you spend all of that time building something that you don't want to do?
I kind of look at this a little bit on a different thing, because he does start with the primary aim. I totally understand where you're coming from. If that's your purpose for doing it. One of the things that strikes me on those that you do start with your primary aim, which is, what you're doing this for, which has something to do with some type of satisfaction. And then the other thing that I talk about when I'm working with my clients is I use this book a lot as a template for them. What I figure is that any business needs to have an organization chart which tells you what you do. And I just do this on a spreadsheet where I just lay out the functions by really the 4 different parts of business, which is business development, operations, finance, and HR, and just what the responsibilities are without putting names on there. And what you can do with that afterwards is put the names on there. And the other thing that ties that together is the operations manual, which in the EMIT they talk about the McDonald's formula, where you got a 95% chance of succeeding if you buy a franchise versus this. And what I pare that down to for smaller businesses is just a series of checklists for things that you are going to delegate out to people and that you're going to train people for. And it's great for those purposes and also for accountability. So I totally understand where you're coming from. I know that you wrote E-Myth Mastery afterwards to probably kind of clarify that. And I really I got to take some notes and write down those 5 things you talked about.
Yeah, in E-Myth Mastery, Michael Gerber actually wrote that he realized he made some mistakes with the E-Myth Revisited, and he hoped to fix them in that second book. But when he talks about the franchise model, I think that's the big key to what makes the E-Myth work, is that when you put together a franchise model, you're creating a set of rules that you follow step by step to get to success. And those rules can be followed by anyone. So when you put it all together, you can hand it off to your second in command. You can sell it when you sell the business. And that franchise system that you create guarantees that your customers get the same level of satisfaction no matter who's doing it, whether it's you, whether it's a second in command, whether it's somebody you've hired down the road, or if it's someone you've sold the business to. And that keeps everything running. And I think that's a big takeaway from the book that people need.
Yeah, that is my takeaway. I mean, the way that I like to look at things in simplistic terms, and the bottom line is, if you have a business that very, very clearly explains what you do with the organization chart and how you do it with your operations manual, the checklist, and so on and so forth, if you write up that franchise model for your business exactly as you say, the business is going to run smoothly. And if you do want to franchise it out and sell it to other people, that's a great way to do that. If you have that organization chart and operations manual there, and the person you want to sell your business and you have that in place, and they ask you, are you coming with the business? And you say no, but this is how the business is run. It goes a long way to accomplishing that. So that is my big takeaway, and that's why I use it as a template to really just talk about organization and operations, because most businesses don't have that, and a lot of business owners just run day to day, working in the business instead of on the business.
Exactly. The big problem most entrepreneurs have is that they are the business. Without them, the business falls apart. Putting together a franchise system guarantees that they don't have to be there every day. In fact, I was working with a small business when they were just starting out, and I was explaining the concept of the operations manual and the franchise system. And they looked at me very quizzically, and they said, well, why would I want to make it so that anybody else could do what I do? And I looked him dead in the eye, and I said, do you ever want to take a vacation? And the light bulb went on. It had never dawned on him that by keeping everything to himself and making himself the business, that was all he was ever going to get to do. He couldn't take time off for vacations. retire was basically just shutting down the business rather than selling it and using it as a retirement plan.
Not to mention, when the business is running, if you have that there, you're going to run a whole lot more efficiently, make a whole lot more money doing it. So you're going to speed up that retirement by a few years if that's what your goal is in this thing. Just because you have things there, you bring other people's brains into it too, just by saying follow the system, and people get a whole lot more engaged. Because a couple of the other things that the E-Myth does talk about is strategies for your own employees, obviously for the general public, for your systems and that kind of thing. But it does address those issues. And you did mention the E-Myth Mastery and how he kind of like regrouped and figured out where he went wrong with the E-Myth. And if you do get both of those books and you start with it, then 20 years later you have the same Sarah who ran the pie shop in the first E-Myth, who came back probably precipitating the problem. So I think that was really something that was written very, very well, because it was kind of like, a rehash and a debrief after how's this worked for the last 20 years or something like that.
Yes. Yeah. And I do want to point out to our listeners that the books are very different from what E-Myth sells as coaching systems. Michael Gerber wrote the E-Myth Revisited and the E-Myth Mastery, and he started the E-Myth coaching system. Well, he sold the company a few years ago, and the people who are running it now actually don't follow everything that's in the books. So it's very different. So I recommend reading the books, but I can't recommend the coaching system because they stopped following their own founding premise.
Yeah, and obviously coaching is something that you and I do also. And if they want to go to the big companies and do that kind of thing, and obviously you can probably buy into that and become a professional coach using that system, or, the John Maxwell system and all these other systems out there. But I like to take a look at what the components of it are and break things down into more simpler terms. And that's kind of what this book has done in the first place. It's just concept, organization, operations. Those are the two cruxes for running a successful business if you have a proper plan and a proper vision in the first place, putting it together. So, and it's not rocket science to figure that out.
And one of the things the E-Myth does talk about is expanding your business, because if you are your business, there are limitations about how much work you can do. There's time limitations, there's skills limitations. But by putting everything in a franchise system, you can bring on more people doing the same thing that you do, which doubles, triples, quadruples the amount of work you can do, the amount of clients you can take on. And the fact of the matter is, one person can't do everything. But you have to have that system in place to bring on other people so that they understand what the focus of the business is, how it's done, how to maintain quality. We've all gone to restaurants where suddenly they've gotten a new cook, and the food, we've loved the restaurant for years, but now all of a sudden the food's not as good as it was, because the new cook brought in their own recipes, their own systems. And that's really what the franchise system is. It's a series of recipes for running your business. And by making sure everybody follows those recipes, you maintain quality. And that's the one thing a customer will never forgive, is a sudden loss in quality.
That's the McDonald's model. In their operations manuals, this is how you do the French fries from start to finish. This is the temperature you get the hamburgers, and all that other kind of stuff. And what you were talking about is really beginning of the book. One person cannot be the business, and you got to plan for growth. And it talks about the 3 stages of growth in the business. And most people start as a solopreneur, and that's infancy stage. And then the expansion mode, where you have to get employees and so on and so forth, is when you have too much work to handle by yourself, and you either go backwards or you throw your hands up and you start losing money all over the place. And that's really what this book is all about, is taking your business through infancy, through expansion, to the maturity, which is actually putting together your franchise model. And that's, again, the expansion phase, when the business owner doesn't plan for it ahead of time, but hits where he has to do it. is normally where everything happens that's not too good for the business owner.
Yep, exactly. Now, something the E-Myth misses out on, though, is the ability to adapt those systems. And they use McDonald's as an example of what to do with the E-Myth, but McDonald's does this and the E-Myth sort of missed it. But they talk about how you stick to the franchise model, everything's done the same way every time. At McDonald's, that's not actually the case because they've adapted to local tastes. If you get a cheeseburger at a New York McDonald's, it's American, it's the burger, American cheese, pickles, onions, ketchup. If you get a cheeseburger in Connecticut, it's the burger, American cheese, pickles, onions, mustard, and ketchup. So they've adapted their recipes to meet the local needs. And that's something the E-Myth doesn't do well, is that ability to adapt. That's why when we were creating our system, we created what we call a feedback loop, which is, okay, how is it working? Is it working properly? And you make sure that those systems, you're running checks on them. Because just because it's working doesn't mean it can't work better. And what works in one place may not work perfectly in another. So you do have to be aware that if you're doing something wide-ranging, and quite frankly, in today's economy, it's very easy to have a business where your customers are all over the country, not just in one geographic location. You need to be able to work with them.
Absolutely. And this book was written long before the internet and that kind of stuff, too. I mean, it does touch on at the beginning of the book the business development process, which is innovation, which is the idea, and trying it out, and then the quantification, which is weighing the results and then orchestrating it into your business. And basically, that has to be an ongoing process, which is probably how you come up with the hamburgers in Connecticut having mustard on it and not in New York and that kind of thing. So it is so important to be doing that. It's not like, oh boy, I got these things done, I don't have to do anything more for my business. It's an ongoing process, and it has to be analyzed all the time. So, and with the tools we have now, which we didn't have back when this book was written, you can take your organization chart and operations manual, and it's now computerized in spreadsheets or Word documents or whatever, and you can really, really modify things quickly instead of having to go back to type everything out. You folks out there, you know what a typewriter is?
There are still typewriters out there, you know.
Smith Corona, there you go.
Yeah, something else that you do have to keep in mind is that since the E-Myth was written, things move a lot faster. So the pace that you have to go through this is a lot quicker than what Michael Gerber originally envisioned. I mean, the fact of the matter is, the internet has put all sorts of information at your fingertips. Researching, developing your systems are now done much faster. And you can actually go online and find out what systems similar businesses are using so that you've got a better idea of what's going on. You're not working in a vacuum.
Yeah, things are a whole lot faster as far as that goes. So with the internet not being there 20, 30, well, the book's probably 25, 30 years old. I can't remember how old, but I think I read it back when I had my manufacturing business, and things have changed. I mean, but conceptually, again, keeping things in motion is really, really important. So what we're really talking about here, the overall overriding principle on this is working on the business instead of in it. And this kind of ties into the strategic planning that we've been talking about over the last couple of months and that kind of stuff too. I mean, it is kind of all related, but this was a really nice early attempt to put everything together in a logical format that a lot of people can follow.
Right. And, you know, something he does talk about in quite a bit of detail, which is, I feel, very important, is one, having a different strategy for different parts of your business. So he's got a primary strategy, he's got a strategic objective, then he's got he talks about a management strategy and putting together a system for that, a people strategy and putting together a strategy for employees and customers, a systems strategy for what resources you need. And he actually defines system strategy in an interesting way. He breaks it up into 3 different parts. And it's hard systems, soft systems, and information systems. Hard systems he defines as actual materials that you need to use, inanimate objects, he says. So if it's a computer, office equipment, work manuals, things like that, he calls those hard systems. Soft systems are people, ideas, scripts for salespeople, any kind of any kind of concept, and anything that people have to react with. And then he talks about information systems, which provide the data about the interaction between your soft and hard systems. Now, when he was talking about information systems, he was primarily talking about accounting and tracking that. Well, now our information systems have exploded. So that's really a much larger part of your business now than what he had originally envisioned.
Yeah, conceptually, though, it absolutely does work. So having but it's just that the soft systems, or what was the last one again? The
information systems.
The information systems are so much there, and if you take a look at a lot of it does go back to good old accounting, but there's just so many more ways to analyze things. One of really what we're talking about is cost accounting, which is instead of just making sure everything is balanced for tax purposes and balance sheet and income statement, actually taking a look at where you're making and losing money on different things, such as just by allocating income and expenses to different things that you do and other variables. And with the computerized systems, if you can design programs now to just analyze things every which way, and it goes through all kinds of industries. I mean, before you go to work on a sports team, you get analyzed about 1 million different ways and so on and so forth, as far as different statistics they're trying to test you for.
Absolutely. And now there are so many systems you can use to analyze. You can use things like QuickBooks to track your finances. You can use CRMs to track your sales action. There's even just a simple spreadsheet. There's no end to what you can use in information systems. And using that information is key. One of the things he talks about, and I don't remember if it's in eMyth Revisited or eMyth Mastery, but he talks about the financial end of it, and how very often entrepreneurs will look at their profit and loss, and they'll go, okay, we're making money, this is good, but they'll forget to look at cash flow. And suddenly, even though all of the numbers look like they're very profitable, they've got no money to run the business on. So it's very important that you use these systems to track not just whether or not you're making a profit, but your cash flow is your money coming in before your bills have to go up, because that's actually where most businesses fail, is cash flow.
Absolutely. I mean, profits, they're on paper. And if you're making profits on paper, that's really good. But if you have $100,000 in sales and $100,000 of accounts receivable, that's not money in the bank. If the profits do not turn into cash, then you're stuck. And the bottom line is, part of what you have to plan for moving ahead is not just running your day-to-day operations, but things such as capital investments and this and that and so on and so forth. And all of those run through your statements, not as cash expenses, but depreciation and that kind of thing. So it's a whole lot more complicated, and that's why it's really so important for business owners to just know how to read these statements. They don't have to be able to sit down in QuickBooks and do it themselves, but it's so important that they understand the concept, because cash is king.
Absolutely.
Nice, cash is king.
Absolutely. And that's why the systems that Michael Gerber talks about are so important. Because if you have the systems in place, you know what the data is. You know what your cash flow is. You know what your profit and loss is. You know how many customers you have, how many customers you need to make a profit. You have all of that information. And putting that all together, that's what allows a business to succeed.
Yeah, I mean, this is something where if you are a smaller business and you don't really have the resources to do this yourself, there are businesses out there that just do analytical work and accounting and so on and so forth. These are things where it's easier to sit down with an expert and just put that into your budget as a fixed monthly expense or a one-timer to get the system up and running so you can do it. So don't be frustrated if you can't do it yourself. There are people out there that can help you out.
Absolutely. Hire a bookkeeper or an accountant, even if it's just so that they can set up QuickBooks for you. QuickBooks actually has come out. They've got some great dashboards, very easy to see the health of your business. But it is important that you set it up properly. If you don't feel you can do that, hire somebody to do that. It actually will cost you much less in the long run than trying to fight through it on your own.
And there's a lot more power to QuickBooks than most people realize. It's a lot more than just a checkbook for your business. I mean, one of the things that I wish QuickBooks had been around back when I had my manufacturing company, because one of the features of QuickBooks is that you can just add an extra field when you're plugging in an invoice or paying something called class, and that class can be a product line. And just by plugging that in there, you can actually analyze how you're doing by a particular product line just by allocating income and expenses to it when you're plugging in a bill or when you're invoicing somebody. And a lot of people don't even know that. And just by doing that, you'll be able to see where you're making your money and where you're not, because you could be very, very profitable with it, but you could have something that you're doing that's dragging you down and you don't even know about it.
Absolutely. All right, we're coming up on our time here. So, Chip, what do you think is the one takeaway you want our listeners to take from our discussion of the E-Myth?
Organization, operations. Just simplify that and then set up a system to monitor things moving ahead. But you got to get the basics first.
Absolutely. I think the big takeaway is set your business up like a franchise. You want to be able to duplicate what you do. The more you put it in writing and very clear so that anybody can follow it every step of the way, that's the key to a successful business. And also, if you're going to read the E-Myth Revisited, and I cannot stress this enough, follow up with the E-Myth Mastery, because it goes into a lot more detail and clears up a lot of things that the original caused some problems with. And again, both of those books are available on audio. Michael Gerber reads them, and that's actually very amusing listening to him read the E-Myth Mastery, where he talks about realizing there were problems with the E-Myth Revisited. So he goes back and fixes it. Pay attention to both books. You've been listening to the Success Showcase. We're available every week on blogtalkradio.com/success showcase. You can also find us on the iTunes Store or in the Apple Podcasts app. We look forward to seeing you next week. Have a great week. Put your systems together and come out running.